Hello everybody, my name is Mark. Welcome to another one of my investing videos, and in this video I'm going to talk about why do I want to be a day trader. And here I have a list of stocks. These are the big movers of the day, and I got these off of Google Finance. This is not some secret stock website. You can get this information every day of the week, every day that the market's open and closed. And these are the big movers of the day. Today is Friday, November the 17th, 2017. And you can see we got some winners and we got some losers. The market's closed right now, and I'm going to start with Foot Locker. Now you can see Foot Locker had a really great day. It went up 28.28%, but I am going to click on the stock options. Now you can see that Foot Locker went up $8.97 a share. So if you would have bought 100 shares, you would have made $897 on a what is it, $40.82 minus $8.97 would be like 31. You would need about $3,100, a little more maybe, and you would have made $897. You would have made a 28% return. That'd be pretty good. But look at these call options. Okay, now these are the weeklies. Okay, you can see that I have highlighted 0 days to expiration. That means that all of these stock options have expired. All stock options expire the last trading day of the week, and that is always going to be on a Friday, unless of course Friday is a holiday like Christmas or something, and then it's going to be on a Thursday, but typically it's going to be on a Friday. And so if you own a call option and it's in the money, then you will be the proud owner of 100 shares of Foot Locker. And if you own a put option, then you will be, you better have the money in your account, or you better own the 100 shares. You're going to get a margin call, but you will be selling that put option for whatever it's worth, for whatever the strike price is. So like a $38 call option, you'll be buying Foot Locker at $38 a share. $42 put option, you'll be selling Foot Locker at $42 a share, etc., etc. Okay, so this is what I want to highlight. Okay, look at the change. Okay, and it doesn't look like much, right? $38 calls went up $2.55. That's leveraged 100 to 1, so that's really $255 a contract. Okay, the $39 a call went up $1.51. The $40 calls went up 64 cents. Doesn't look like much, does it? But take a look-see at this. Okay, these are the $40 calls. You see I have it underlined in red. They're at the top of the option box. But look at what I circled there. The value of this stock option increased 581%.82. So that means that if you had invested $1,000, not the $3,100 to make the $897 to buy the 100 shares, but if you would have invested $1,000, your $1,000 would be worth $5,810 and 82.82 cents, right? That's the return on your money. So that's pretty wonderful. Now look at the $39 calls. Those things, those puppies went up 794%. So your $1,000 would be worth $7,940.74. Look at the $38 calls. That puppy went up 910%. So your $1,000 would be worth $9,100.71. So are you getting the idea? Are you getting a picture why I want to be a day trader? Because I have a little bit of knowledge about stock options and leverage and how they work, and the wonderful money making opportunities that there are in these stock options. And remember, you cannot lose more than the premium. Okay, so your losses are limited, but your gains, you can make as much money as that stock wants to go up. And this stock, Foot Locker, had a really good day, and so the call options had a really good day. I mean, how would you like to make all that money on $1,000? How would you like to make $8,100? I mean, you can do that as a day trader. Now granted, these are very extreme examples and you have to hit the bullseye just perfectly, but even if you get just part of this profit, isn't that a wonderful day? So now let's look at the losers here, and I'm gonna do the one at the top, the Williams Sonoma. Many of these stocks I never even heard of. Okay, but let's look at the stock options on Williams Sonoma Inc. Okay, that stock had a bad day, went down 14%, 14.28%. But again, let's look at the put options here, okay? Look at the change in the put options. The put options went up in value. That means if you would have bought put options on this stock, you would have made a lot of money. Now, why do put options go up in value when stocks go down? The answer is because put options are contracts to sell the stock at that set price. So let's say that you had bought that $50 put and now the stock dropped and it looks like it's at $45.78 a share. Wouldn't you like to sell that stock for $50 a share and then turn around and buy it? Remember, the contract is $100 a share, so wouldn't you like to sell a stock for $50 a share, get $5,000 and take the $5,000 and buy the 100 shares, buy 100 shares for $45.78? You would make almost a $500 profit. You would make, was it $422 profit instantly. That's why put options go up in value, because put options are contracts to sell. So the bottom line is, if you think the stock's going to go up, buy call options. If you think the stock's going to go down, buy put options, and you can make really good money. Okay, so again, circled there in the red, it doesn't look like much, right? $47.50 puts went up in value $1.70. Whoop-de-doo. $50 put went up $3.96. $52.50 put option went up $5.27. Doesn't look like anything to make a big deal out of, but take a look, okay? This here, I underlined, this is the $47.50 put. Look at the change. Your $1,000 would be worth $6,530.85. It 6.5 times its money, 653% increase in money. How wonderful is that? And that happened when the stock went down. Okay, here we have the $50 put. It went up in value 471%, 0.43. The $52.50 put, that sucker went up 363% of its money. I mean, wonderful opportunities here. Now there are two things that are stopping me from being a day trader. One, I don't have the knowledge or the skill set to be a day trader. All of my skill set and knowledge is in investing and how to manage my risk and make profit safely using options as my leverage and as my hedge. And if you watch my videos, you'll see that I am doing just a fine dandy job of doing that, and I am up for the year. I believe I'm up about 14% for the year. Okay, and I feel pretty good about that. But again, I want to be a day trader. I want to make this kind of big banana money. Okay, and then there's another reason why I haven't become a day trader, and it's this right here. There's a rule called the pattern day trader rule. Okay, and a pattern day trader is any trader who executes 4 or more day trades in a 5 business day period. A day trade, it's in quotes, that's when you buy and you sell and you buy the same stock or security in the same 24-hour period within a 5-day period. And if you do that, then like it says, if the account falls below the $25,000 requirement, then you cannot place any more day trades till you get the $25,000. And if you violate the rule, then they'll freeze your account. You won't be able to place any trades at all. Okay, so not a good thing to do. And so one of my goals is to get that $25,000. And I did a video a few weeks ago. I am an Uber driver, and in about 5.5 weeks of Uber driving, I've made over $2,100. And guess where that money's going? That's right, it's going straight to my margin account. And just as a little side note, if you have a regular cash account, then the rules are different. You're not even supposed to be a day trader, but what they do is it takes 3 days for your funds to settle. Okay, but if you were to go over that limit, then that's called a free ride, and then your account would get frozen. Your cash account would get frozen for 90 days. Okay. But with a margin account, you don't have that concern, but you do have this pattern day trader rule, and you need to have $25,000. If you don't, then they won't let you do it, and they'll freeze your account if you break that day trading rule. Okay, so it's a very pain in the you-know-what rule, but it is what it is. It's put out by FINRA, and so my goal is to get $25,000 as quick as I can, so that I can take part in some of this action, and I can make the big money that I want to make. I have a deep desire to be in my heart to become financially free, so that I can so I don't have to work, so I can work by choice and not by because I have to. I can work because I want to, not because I have to. So that's what I want to do. I want to be a day trader. If you have $25,000, I gladly take donations, but if not, no worries. Become a day trader yourself and come up with a way to make some money and make some videos and show me how it's done, because I don't have the day trading skill set. My skill set is investing and managing my risk, making profits safely, cutting my losses using options, put options, particularly the option collar strategy method. And recently I just started doing calendar call spreads, which I am falling in love with very quickly. So that's it for this video. I hope you enjoyed this video. I hope this video motivates you or excites you to become an investor. Investing and trading are very interchangeable in my opinion, and you really can't have one without the other. And I hope you like this video, and I hope to see you again. Thank you for watching, and have a good day.